Is this the end of the gold bear market and the beginning of the next gold rally? Big price move in gold and silver in Asian and European trading today. We see very important price movement. We picked up two positive signals pro gold, but we also have a big warning signal that we cannot ignore. And in this video, two new important intermarket factors pro gold that you need to know about. Everything you need to know about the situation in gold and what to do in today's video. No time to waste. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Helmy, and let's jump right into it. Big price moves today in gold and in silver. Is this the end of the dreaded 6-month bear market and the beginning of the new gold rally? Well, let's start with the positive. We picked up two really positive signals in the charts, and let's get right into it. The first one being, assuming the move that we see in European trading right now holds in US trading and does not get sold off, then we finally marked a higher high. Intraday we already made it, but also on the close, after we made two higher lows. That is the first sign of a change of trend, because if we look at the past 6 months, you can see we haven't had this. We had higher lows here, but we didn't have higher highs. Now we would have higher lows and higher highs, two each. That would be a very interesting signal. Second big signal, if this price action would hold on the close, it would be a new monthly high close. That is a positive sign. You don't have that in a bear market. You can have it if it's a really long-term bear market, and we're talking about extended bear market rallies. But in terms of a bottoming formation, that's a really positive signal that we need to pick up. In combination with the break of the downtrend that started in March, excuse me, and the triple bottom with higher lows, perfect intraday, not on the close. All right, we undercut on the close here, but intraday, perfect textbook triple bottom. So that is really good news for the gold bulls. There's a factor also that you see down at the bottom in the RSI. Remember, I pointed out in June, hey, I think we're nearing a bottom, and the reason is we got a positive divergence in the RSI. Right? Price was falling, but the RSI actually made higher lows. So higher lows are nice, but we also want higher highs. And we want an RSI above 50, because that tells us that the buying dynamic is starting to gain traction. Well, both these things are finally happening. So not only are we making higher highs now in the RSI. And let me delete this right away again, because I just want to point this out. We are at 55 now, so above 50. And what is very interesting, this is the highest RSI level that we have seen, as you can see, in a very long time. We're above May, we're above the April highs. We have to go all the way back to March to find an RSI that's higher. That is very positive. Now, what's the negative? And then we get to the big intermarket factor that we need to pay very close attention to. Well, you see the negative in the chart right away. We slam right into the 50-day moving average, the purple line today. Will we be able to break the 50-day, or will we get rejected at the 50-day and then move lower? As I've pointed out before, the 50-day is what has been leading this whole bear market. Look at this. The second we broke the 50-day in March, it was over. Waterfall sell-off with panic selling at the end at the 200. And then look at this. We doinked off it once, we doinked off it twice, and then it got so bad we weren't even close to getting close to it again, testing it. Now we are. So this is a monster level. It's basically 4,160. If we get rejected here, we're gonna go lower. We're gonna see some profit taking. We're gonna see some shorts come back in, very short-term traders. And then things get really interesting, because what happens then? Are we going lower and get the panic sell-off, or are we turning around, let's say here at 4,070, right? Or somewhere around 4,050 to 4,030, and we make another higher low. That is the interesting part. If we break above the 50, we'll get real buying dynamic. And we'll jump at least to, obviously, 4,215, likely go even higher, jam into this resistance zone here, 4,300-ish, right? Let's say 4,320 to 75. So that's a big move. The other part is, if we break the 50, we make a higher high, higher than we did here in the beginning of July. And that would not invalidate yet, but reduce the possibility of the Wyckoff pattern dramatically, because we would then make a second higher high that is higher than the previous AR, the automatic rally high. And that's not how the pattern usually works. It's not out of the question that we still get the panic sell-off, but as you can tell and see by now, man, there are a lot of factors that are now step by step, puzzle piece by puzzle piece, turning into the favor of triple bottom. 4K is it. And that's why I've been telling you for a month now, don't wait 100% for the undercut, for the liquidity grab, for the final sell-off. Start putting some money to work. Invest part of what you want to invest in gold, silver, and the miners, so you are not sitting around empty-handed. and that's really paying off. If you missed those videos I was just talking about yesterday, hit the subscribe button so you are ahead of the market. Now let's talk about the big intermarket factor that we need to pay attention to that not enough people are talking about, and that's the dollar. Here's the Dixie, and as you can see, boy, this doesn't look good for the Dixie. And obviously, if it doesn't look good for the Dixie, then that is very good news for gold because we got the negative correlation. So let's zoom out and get into it. We started an uptrend in the dollar on January 27th. Isn't that interesting? Let's jump to gold real quick. When did we get the big sell-off in gold? Thursday, January 29th, 2 days later. Now you can tell me that's some Hogwarts Harry Potter coincidence BS. Okay, I just pointing things out here that are lining up very perfectly. And we had a big up move in the dollar, which coincides with a big decline in gold. And it peaked with this perceived breakout, here we go, of this sideways range that we had been in since 2025. So it started about pretty much like, let's say like 13 months ago. A breakout like this, that was big news. Now, if you follow the channel, if you have seen the videos, I told you from the beginning, yeah, it's a breakout. We might go to 103, 104, but ultimately the dollar is going to go lower. So we broke above this resistance pattern. Everybody got bullish dollar. Everybody got bearish gold. But look what has happened. This got to be one of the nastiest bull traps I have ever seen. I mean, I don't even want to know how many FX traders just got absolutely flamethrower to the face. Look at this. Bull trap. Then we go down. We undercut the uptrend that started the steeper uptrend in May. And you're like, all right, now, so we're going lower. This was a bull trap. Well, now I'm getting on the bear side, on the short side. Well, bear trap. We're moving back up. We break the downtrend. Now the bulls are like, let's party. And it turns into a huge bull trap. I mean, a triple fake out in about a month. That is brutal. And you've seen the recent here waterfall sell-off in the Dixie. We crushed below the 50-day. That's gone. That's confirmed. And as you can see, now the Dixie is holding on for dear life at this uptrend that we started at the end of January. That started it all. That started the appreciation in the dollar. And that started with a lead of basically a day. The massive correction in gold. So, if we break this uptrend, we're going straight to the 200-day. And if the 200-day, this golden line here, does not hold, it's game over for the dollar. Then we're very likely heading back down to the lower end of the sideways channel. And this was one of the nastiest bull trap fake outs you'll ever see, with a fake, double fake breakout that turned into a double top formation. Super nasty. The magic number to pay attention to is 99 in the Dixie. If we break below 99, the 200 is gone, the uptrend is gone, the sentiment will turn negative, and we're going to go down to 97, which, again, doesn't sound like much if you're not an FX person. That's a sizable move. And that could then be the fundamental thing that fires up the gold price, and then therefore the silver price, and pushes it over the 50-day and then over the 200 down the road. So how do we act now? What do we do? If you have not put any money into the market and you're sitting 100% in cash that you want to deploy, but you say, well, the sell-off is coming, I know it. Well, you don't know it. And guess what? I don't know it either. And nobody knows it. And that's why I always say we have to play the percentages. We have to act like the smart money, which means we need to allocate our capital according to the different scenarios. And the scenario that 4,000 is the bottom, and that we're not going to get the final panic sell because there are really no sellers left, needs to be honored by allocating a percentage of that money, already putting it into the market. Here's a really interesting fact that I paid attention to that I don't think enough people are paying attention to. The South Korean central bank came out and announced that for the first time in 2013, they are buying gold. They're buying domestic gold that's from South Korea, which, again, different story. Nationalization of commodities. You follow this channel, you're familiar with it. That's why I love US mining companies, or mining companies with projects in the US. Canada also great. That's coming. Deglobalization of the commodity trade. But anyway, so they're buying gold. And that's nice. But everybody has known that the central banks are buying gold. Yeah, we had some forced selling. I mean, Russia has to sell everything right now. Turkey had to sell some to support the lira. But overall, I mean, China has been a massive buyer. We know this. And nobody cared in the past 6 months about it. And now all of a sudden, South Korea comes out and says, all right, we're buying some gold. And it's a big story. And it's one of the factors that is moving the gold price. That, ladies and gentlemen, is a change in narrative where all of a sudden the market looks at something and sees it through the bull lens. After before, not in this case, but sometimes they see it through the bear lens, right? Or it's just, as in the case with gold, a non-factor. Nobody cared about the central bank buying. I remember in the videos in the past month, I showed you the graphics of the central bank buying. Didn't do anything for the price. Now it does. That is a change in the perception of the facts, a change in narrative towards the bull side. I leave you with this. Have a great day. We see us tomorrow. Bye-bye.